Hello guys, welcome to another video. In this video I'm going to be showing you how to break down the market starting from the higher time frame down to your entry time frame. So one thing you need to understand about the market is how to align your higher time frames, because first the higher time frame is the one that leads, right? So you have to understand the direction, or you have to understand how to put these time frames together. Now you know that the market is fractal, which means what actually is happening on the higher time frame can happen on the lower time frame. But first you need to understand the position of each of these time frames. First is the higher time frame, then second now before you are looking for your entry confirmations. And also what you need to understand is that big moves that happen in the market, they happened as a result of the higher time frame. This actually means that you can maybe find a setup or whatsoever any trading style that you have on the lower time frame, but still it is not going to take that time. Why? Because the setup is happening from a lower time frame and it's not going to last that long, right? That's the simple thing about this market. So you have to understand that for you to catch at least a move that will last a little longer, you need to understand how the higher time frame is moving. You need to understand where you need to understand the movement behind the higher time frames first before now you move down to the lower time frame just to refine your entry to get a much smaller one. So today we're going to start with Euro USD. We'll start right from the 3 months time frame, and currently this is a new month, the month of November, so which means we're having a new monthly candle as well. So first of all, start with the 3 months time frame. There's something here which I want to show you guys. All right, now first looking at this particular time frame here, we could say that we're having a rejection block here, which price already reacted from, which is the 3 months time frame. Right now, currently, if price is reaching out, or if price is respecting or reacting to an area where we see it to be an area of resistance, then we expect price to maybe pull back into internal range liquidity. And the only internal range liquidity that we have here is this fair value gap as of now, the first one. And also we have the other block which is sitting here. And also this is also going to be our breaker block. All right, this is also going to be like a breaker block for us. So we're actually going to see this more on the lower time frame. Let me try to fix that. Okay, so we're going to have this on the lower time frame, a very to be a very clear breaker block. Maybe if we go like to the weekly time frame, we're going to see that that's a very clear breaker block. Why? Because it took out liquidity here before shifting higher. So you know the difference between a breaker block and maybe a mitigation block. For a breaker block, it has to do what? Clear liquidity, and then it moves lower. Why is it important that it must clear this liquidity? First, because for you to have a good order block, also you need that other block to do what? To break structure to the upside, right? So when we have this break of structure to the upside, we consider this zone here to have an order block, right? Especially how this movement also happens. So when price comes down and fails to respect this other block and it breaks through it, also how it breaks through it matters. Then we have a breaker block right here. So which means we want to have that liquidity sweep. So on the downside is the same thing. When we have that liquidity graph here, it is also important for us to have this as our breaker block. Also, there are elements for us to consider as our breaker block, which is inducement, but that's not what we're talking about. I think I've made a couple of lessons on that breaker block, right? So I just wanted to point out something on the 3 months time frame, which will give us reasons to expect price to at least push down a little, all right? But for now, we have on the 3 months time frame price taking out this low and then also breaking out this high. Okay, so if we go to the line chart, we actually see that we have a very nice zone here, which we can say it was a resistance zone, and now we expect it to be what? A breaker, right? I mean, we expect it now to become at least a support. So this means that we have a likelihood of price retesting this zone. But now when we're looking at it on the candle, we also see that we have an order block there, plus we have a fair value gap sitting exactly around that zone. So we have these two internal range liquidity arrays sitting nicely within this area. And also you can now put out that, okay, this is the range of this 3 months candle, so we can have that range as well. Now let's move straight now to the monthly time frame, already having in mind that we have this 3 months fair value gap as a point or as a zone, which is very interesting for us. So we have 3 months FVG. We're going to have that zone. Okay, so let's move down now to the monthly. Remember, we have already framed a 3 months gap, right? We have already framed a 3 months bias, expecting bearishness. But remember, it's 3 months. This might take 3 months to come down to that point. That's why you need to understand other time frames, okay? So that you don't just start looking at the 3 months and then you just maybe jump to the 4 hour, you just start selling. No, it doesn't happen like that. If you do that, price will play around with you for a long time before it actually comes to your zone. Okay, so we have the 3 months fair value gap here. Let's try to maybe lock that up. Okay, so this means that even though we're expecting price to this 3 months fair value gap and also retesting this zone, there is a likelihood that price should at least take out this candle's low, which is the 3 months low, all right, before anything happens. That's at least what I'm expecting. And also, those of you who trade CRT, we also have this one to be a CRT where price took the high, close back within, and then this third candle is pushing lower. There are high possibilities that price will want to come down to take out the low. And like I said, this is a monthly chart, and then we're having a new monthly candle. So we're expecting a new monthly candle to open come Sunday tomorrow, and then maybe we can now push lower to target this previous daily low. All right, now I don't want us to start talking about these levels for now. This is enough for us to target. This is going to be a lot of pips if we can catch just this move here. All right, it's going to be a lot of pips. All right, so let's go straight now to the weekly chart. Now, even with this, if you guys are in my community, you also understand that we have been targeting this trend line liquidity here for quite some time, since 1, 2, 3, 4 throughout this month of October, and price just did that liquidity sweep yesterday. All right, taking out that low, and I believe that price will still want to drop much lower again. Okay, now this is the weekly time frame, and we still have all this zone here to trade lower. Also, if you want to look at the line chart, you would want to see that this was first of all an area where we could say it was a support zone. What did we have here? We had couple of rejections from that zone, and at the end of the day, what happened? Price closed below it. All right, so price closing below it now makes it a likelihood for price an area to maybe support it to continue lower. Plus we also have this minor one here, which you might say price might also want to react to it. Okay, so let's go back to the weekly. So on the weekly time frame, remember, if we're bearish, up close candles would likely act like resistance for us. So based on the weekly, if price might want to come back to retest this area, we might want to see lower prices from there, but we're going to see it more clearly on the daily chart. All right, now let's look at the daily. Beautiful. Now on the daily time frame, we have three soldiers. All right, three soldiers. We had price respecting this bearish order block, and also from here we respected this bearish order block, and we are pushing lower. Now there is something here that I want to bring to your attention. When you see consecutive candles like this, how many? This is a whole week, right? These consecutive candles is an order block. Okay, it's an order block on the higher time frame, which is the weekly actually, because I think you saw that weekly bullish candle, right? This candle. So when you have consecutive candles on, when you have consecutive candles like this, it is actually another block. All right, so this area, this zone is actually another block, which means that we can actually have price come right back up to this point and then continue lower. Okay, and also you can see price close below this point. So as of now, what I would want to expect on Euro USD, okay, showing you how I'm trying to break down the charts, I would love to see something happen like this, maybe we can play around back and then finally we push lower like that. Okay, now you will notice also here that we are now building up a bearish trend line like that. So maybe if we push back up to that point, trying to also react to this area, we might want to continue from there. Okay, let's see what the 4-hour is showing. Maybe we'll have a key level there on the 4-hour. Beautiful. Now on the 4-hour time frame, let's look closely. Let me remove this trend line. Now on the 4-hour time frame, we have something very interesting. Price mitigated this other block, went lower, shifted structure right here, and then since then price hasn't gone back up as since. So we have this other block here. It mitigated this one, so we can have this other blocks right this moment, this one. Okay, also remember that it is we do the consecutive candles on the daily and also the weekly key level. Okay, so we have that candle, and also we have this fair value gap here. Now this is a good spot. We can use this high right here like inducement, or even this low, which is likely going to be an inducement. The high of this candle is going to be an inducement probably on the 1-hour time frame. So what I'm expecting on Euro USD as of now is maybe price to do some movements here, and then if we get some displacement lower from here, then we'll take some sells there to continue down to the 3 months fair value gap. You can also see that this is now likely like a market maker sell model, where this will be the origin of the consolidation. Price is breaking out of all this trend line liquidity here, and we're testing it, and then we want to push lower from there. All right, so whatever we want to draw a trend line as of this area, we have been breaking out of it, and then we're pushing more lower, and then we are now building out this bearish trend line here. Okay, so let's see if that is going to be the case. We'll have some sales confirmations from here, and then we'll push price lower from there to the 3 months fair value gap, and from there we can get back the rally that we were expecting. Now let's look at DXY even. DXY should at least be something not that different. Okay, beautiful. On DXY as well, we have our 3 months fair value gap, which was almost filled, and also we have, remember, our other block as well. Our other block as well on DXY. This was an accumulation manipulation to the upside, and then price is pushing lower. So we have, this is as a very clear zone to expect a reaction from. Okay, so we'll still want to have price push up into the fair value gap here, which is that of the 3 months as well. Now the only reason I'm going to the 3 months is because of this draw on liquidity that we have, and I think we pointed out this way back like 3 months ago when this candle closed. Now let's go to the daily of monthly, sorry. Now we also have a new monthly candle on DXY. You can see price sweep this lows, and we're pushing higher. This can also be a CRT as well, and fortunately when you look at this area on the monthly time frame, you would want to say that this is also another FVG, which means price can likely come up to this point. Now I would accept that because when you look at this price action here, okay, let's try to point out something here. When you look at this price action, let's put Euro USD, okay, this way. Now when you look at Euro USD and DXY, you will notice that DXY is trying to move more, DXY is moving faster up than Euro USD, right? when you look at DXY, you can see DXY is almost very close to taking out this low, while Euro USD is still a little bit far. So why am I showing this? This actually means that there's a likelihood for DXY to even push higher into this fair value gap. But for now, let's try to take out this high. That's just how you frame your buyers at the moment. So we have more buy side liquidity zones where price might want to trade up to. We also have this place as an inversion as well. So let's go to the weekly. Now on the weekly, that's also a very nice high. Same with this one. So just looking at it on the weekly time frame, this area is catching my attention, and what is here is what we call a no withdraw on liquidity zone. So we have this, the high of this candle has no wick, and that is kind of like a good draw for price to want to pull up to that point. So if we're taking this high, there is a likelihood that we are also going to take this one and also take this one too. All right, so DXY is still very much bullish, and you can see how this bearish candle supported price, and also we have another bearish candle right here. Okay, so it is supporting price, and then we're pushing it lower. So let's see, for example, let's go straight to, let's go down to, the weekly. All right, or to the daily, sorry. But remember, on the weekly time frame here, we have this key zone. This bearish candle here is going to also act like what? As a support, since remember, bearish candles in a bullish market will act like what? Support to price. Okay, so let's go to the daily time frame. All right, so on the daily time frame, we have very funny candles here, very funny candles, and let's see the daily, the 4-hour charts. We should at least expect something very similar to what we have on Euro USD. So we have this low to use as our inducement. Remember, when the market is buying, when the market buys to a certain level, everybody now understands that, okay, the market is going higher, so everybody should be buying. But then you need to understand that the market wants liquidity, so it has to grab liquidity, which is taking out the people that were buying early and then to move higher. Okay, so this is what I'll be expecting on DXY, at least come down to this point, taking out this low. Also, if we take out that low and we start seeing displacement back to the upside, we can engage also looking at Euro USD to see if we have any form of inducement. Let's go to GBP USD. Right, so GBP USD price already filled out the 3 months fair value gap already, and we're still heavily bearish. So we have this high. Let's go to the monthly. So on the monthly time frame, we have this FVG here, price filled in nicely, and I don't want to just start saying that there is a likelihood of prices to start buying from here, because it's still very much possible for us to see much lower prices before the bullish rally starts back, right? Plus, at this point, price is already trying maybe to close the yearly candle. We just have about 2 months. It's just like we're trading Thursday in a week, right? So we have this candle here, which is a no wick candle, and what if price wants to come down to that point? It is very possible, all right, because even this is another block right there. So let's look at the weekly. And on the weekly time frame, we had a very nice order block at that point, and it actually got mitigated but there is still possibilities that because price is coming back to this point, it's coming down especially to that Norwich zone, and if that's going to happen, then we are using this as an inducement. Okay, but as of now, we can maybe expect price to at least have a reaction from this zone. This can be a value-based rally for those of you who do supply and demand. Okay, so we have this zone. There were others that were from here before you can see that huge expansion to the upside, and before that happened there was some manipulation. So let's see how that zone looks like. Good. So we have a very nice order block here, very nice order block on the GU, very nice one in that, and then we also have this fair value gap. So more sales coming in on GBP USD, and good. We wanted to first of all align know where we want to see price trade down to. So also we have this fair value gap right here, and I think this fair value gap is between this point and this point. Okay, it's above the 50%, which is actually at a premium, so it is a good spot for us to expect at least movement back to before we sell. And then if we don't have inducement on the 4-hour within that zone, then there's a likelihood that maybe even these ones here can be inducement, which means we have this spot here, and can likely be have price pull up to that zone. But now sometimes you will not have inducement to a zone, but what price will do is like this: price will come up, try to induce people like that, and then it moves lower. Okay, so that's another possible move that can happen right there. So let's look at gold. Gold on the 3 month side and the monthly chart, we bought right up to let's see, the high is 4381, so we bought right up to 4,381. The buy on gold, this has really been massive, so there's a likelihood that we might even reach 4,500, and I think we pointed out that level some time ago. About let's just leave it there, and then let's go to the weekly. So we've had a very nice rejection out of this FVG, but I don't still expect this to be just to be a reversal. All right, because first from the start we have been buying too much, which means people are so much interested in the selling, so it might not just be easy for price to start selling off like that, though it is very possible because a lot of people have already been trapped, and especially this candle, it is actually a good reversal candle which shows manipulation. All right, just when buying volume came in to trick everybody into buying more, and then we start seeing bearishness. So even as of now, we can still expect more sales on on gold, but maybe first we have a pushback up to that volume gap, and then we have price at least sell off to some point. Let's see the weekly. I think I saw an FVG somewhere. All right, so even on the weekly time frame, we also have this fair value gap here, plus this one too. I think it wasn't filled, right? So we can have price straight down to that point as well. Also, this one has a very nice order block, so that can be a good zone for price to trade back into. So we have this volume gap right here, and we also have this FVG, this one, which we can use the high of this bullish candle as an inducement to that zone, and then something like this should happen, and then we push lower. Let me just put this down, something like that. Okay, something like that. It's possible that this should happen. Also, if we're gonna use this, we can have that point like that exactly. I don't want to put out this one, but yeah, I think that zone is very interesting. And then we have this other block here. Okay, so I think that's a good spot for us to expect some more sales on gold. But for now, there is a good reaction happening based on the fact that price took out this low. So right now, I'm not going to be selling gold till it reaches out back to this premium. Even if we try to draw our Fibonacci from there to there, we will see that it is at a good 705,618 level. All right, so there's a likelihood that price might push back up to that point before we have more sales coming in. Now let's look at US 100. US 100 have been pushing higher, and then we have this volume gap here. So as of now, we can expect price to maybe push lower to that volume gap. For our chart, nothing much to say on the 4-hour time frame, except this high for price to take and fill that fair value gap and then continue lower. Okay, let's look at Bitcoin. We are still trading at 110,000, and it's been a crazy movement here. See how this candle close, guys. More lower prices. I think we're going to target the previous monthly low, which is at the previous monthly low is at 109,000. 109,000. That's likely going to be our target. Plus, we have this fair value gap here, so internal range liquidity is completed. Weekly time frame. Weekly time frame took out the liquidity, and then we shifted lower. You can see that. So daily time frame, I think we did the same. So now let's look at this closely. Price did not sweep this high, so we still have buy side liquidity hanging around here, right? So there is a high chance that what is going to happen is price will take out this high and then come back lower, something like that. So GBP GPY, GBP GPY, GBP GPY, nothing much to say. Nothing much to say, as we are still targeting this high. Okay, prices are still bullish. Weekly time frame still trying to be bullish as well. We had a very nice rejection from this FVG. Daily time frame, that was a volume gap, sorry. This one we are already reacting from this other block after sweeping out this liquidity here. Okay, so let's see more higher prices to take out that high. Probably heading towards the 3 months FVG, and that was a good retest of this zone, as you can put it, I think. Yeah. So let's just leave it here. I don't want to make this video really long, but I think you've seen how I scale down my charts from the higher time frame, even as far as 3 months time frame downwards. Once you're done with the higher time frame, all you have to do now is be patient, wait on the lower time frame to have your displacement confirmations before you engage, right? Why you're not engaging based on the high time frame is because your stop loss range is going to be big, so you have to wait for price to pull up to your key level, and then you wait for confirmation at that point. It's very, very, very important. So that's it about this lesson. If you have any questions, leave them on the comment section, and if you have a particular video you want me, or any lesson you want me to make and dedicate it to you, I will do that. You just have to leave it on the comment section, and I think I'll possibly reply to that. So thank you guys for watching up to this moment. I appreciate that. Leave a like and a comment. You can also share with your friends if you find the video insightful. All right, so thank you, and I wish you the best.